So here we go. Here's the most simplest play, and this is if you're trying to get bullish. You see how the price enters into the cloud over here and hits to the top of the cloud. That's known as a simple end-to-end play. You'll see the price enter into the clouds. Let me open this example up, and then hit to the end of the clouds. There's a whole nother set of plays involved after it expands outside of the clouds, how it expands, whatever happens, but that's not the concern right now. The concern is an end-to-end play means that the price action enters into the end of the cloud, into the beginning of the cloud, and plays to the other end of it. So that's the most simplest play. Anybody can observe it. Doesn't matter what time frame you're looking on. It's just you have to understand you have to have the same expectancy as you would, or you have to have your expectancy based off your time frames. Meaning if you're trying to do a daily or weekly swing, keep in mind it's going to take a couple days, especially if you're doing the stock market, versus if you're on the 15-minute to the 1 hour time frame, you can see that stuff execute a lot faster. So you can probably see an end-to-end play finished by the end of the night or by the daily close, whatever it may be. So whenever you're scanning through things, one of the simplest things you can do on TradingView is, and you can find this indicator on TradingView or pretty much any decent website that has any kind of charts. So this is TrendSpider. I have it on over here. But what you can typically do is go ahead. I'm going to use TradingView as an example. Go underneath indicators, just type in Ichi. It's the default one. You don't want to change any of the settings. You want to keep everything default. I get the typical question, do you double your settings? No, I do not double my settings anymore. In the beginning of crypto, the first couple years, it was useful and helpful because the markets were truly 24/7 and the price action was a lot different. There wasn't a tie to the stock market. There wasn't the correlations that are going on nowadays. So I found the double settings a lot more useful. And the only other time I find double settings useful are when I'm looking for just straight up super macro reversals in crypto. So, and just to give a quick example on what I mean by that is, like, this is my bread and butter over here for identifying bottoms in crypto. You see how I mentioned the end-to-end play just a minute ago? Crypto has been going down since November 2021. Okay, what we're looking for now is a cloud entry into the clouds, but this is based off the weekly. But don't get too caught up in the time frames right now. What you're trying to learn is structure and how this stuff works, just as the basics. We can get into more of details in just a minute. If you have a question about anything I'm saying or anything at all, feel free to ask me. I don't mind stopping and discussing it. But yeah, this is what I'm looking for in crypto right now, is if we can get some sort of end-to-end play, that leaves us for a lot more expansion, because a cloud entry means that we have to at least get above 27. If we do go sideways a little bit more and get around here, we can probably get in around 25, but you're still seeing the upside to be about 32K. Typically, I don't always aim for an end-to-end play, like the exacts. I try to either do it a little bit less, so I'm not always aiming for the same level, especially if things are meeting up with price action as well. I'm assuming if you're putting on an indicator, you have some sort of understanding of price action and how to identify simple chart patterns. And let me just go ahead and pull that up real quick. And what I mean by that is chart patterns. Like, I really, really, really hope before you're applying any kind of indicator or getting into that, you can at least visually identify with the charts these things: bullish patterns, bearish flags, pennants, whatever the fancy mumbo jumbo might be. And I'm hoping you're using like line charts like this. So once you start seeing those things, I would assume you're understanding price action a little bit to use that in confluence with Ichimoku. But anyway, so back to what I was saying. So that's the only time I double my settings, is when I'm looking for some kind of cloud entry on the weekly end in crypto, but that's it. So keep everything default. All right, so let's get back into over here. So that's what I was showing you, is a bullish cloud is a reversal play. So it's basically looking for a reversal, and that would be a bullish play, so you'd go long. Now for a short play, I can show you on Dixie. Yeah, can I look at BBAI? Yeah, if you guys have any ticker requests, I'll discuss them more near the end of things. I want to just make sure I stick on track of what I'm saying so everybody has access to the video and doesn't have to skip around too much. But here, on the Dixie 1 day, here's a good example right over here. This is something we played live. You can find examples of it on my Twitter when I tweeted it out if you need proof. But Let's go over here. So a bearish end-to-end play is when we get into the clouds and start breaking down and going down. So this end-to-end play was basically when we entered into here, you knew this was going down over here. We can pull up crypto over here and do this on the daily. Same thing happened over here several times on the daily. So on the top, when we topped out around 66K, we broke into the clouds and then hit the bottom of the clouds. Obviously, there's more involved into that as far as like breaking down and things. But right now, if you're just focusing on end-to-end plays, you typically cash out nicely, especially if you're being a responsible trader, not exactly aiming for exacts or aiming for exact breakouts. Because if you notice over here, price action enters into over here for a short, and it hits exactly into the clouds at the bottom. So, I mean, you can see the line over here. It's pretty exact. It tapped exactly on the bottom line over here. So that's the simplest cloud observation play or any kind of Ichi play at all, is playing those end-to-end plays. Something I think I skipped over a little bit is just some of the functions and features of Ichi is like the Tenkin, the Kijin, and a couple other things. So let me show you examples on that. Let me see if I have good examples in here. Yeah, this will do. So there's two different lines on here. You'll see man, why is this fucker calling me? Let me just text him. Okay. Sorry. So there's two different lines on here. There's a Tenkin line and there's a Kijin line. My favorite line personally is the Kijin, and the reason for that is because that's more of a macro line. So whenever somebody says that there's weak resistance or strong support or whatever the strong thing is in any kind of analysis that you hear, that's going to be that line over here, the Kijin line. That's going to be something that holds a lot more weight whenever the price action reaches that level, breaches the level, support test that level. That's something I hold a lot more weight on whenever I'm doing plays. So for example, if I'm trying to get long sometimes, I'll try to set my bids around the Kijin level and wait for us to do like an SFP or try to wick out on the Kijin line and start bouncing off the Kijin line. So I'll hold more weight on that and put a little bit more position sizing versus something that's been going up and we're bouncing on the Tenkin. While I'll still play Tenkin bounces, the problem is that let's just say I'm typically, my bigger size is considered $1,000 in the Kijin. I would automatically cut it in half on the Tenkin just because that's considered a smaller line, and if your invalidations are based off of each of those lines, you have to be very strict with what you're doing. And we have more of a chance of breaching the Tenkin typically than we do the Kijin. Like, we can flip around back and forth with the Tenkin all day long. Like, I'll show you examples as we're going through over here. Let me see if I can pull up Dixie. Like, you can notice over here with Dixie going on the downtrend. And before I go a little bit into it, the one thing I really, really like about Ichimoku, and it's pretty much with most indicators, is that it gives me a really, really clear indication of the trend of, if I'm going to be shorting, what are my invalidations? Like, that's one of my biggest things, because I used to get stopped out all the time, and I used to be like, yo, what the fuck, man? I'm getting stopped out left and right. Why did they keep hunting me? And over time, you'll understand with the tickers that you trade, what you can adjust to and what you can do. Like, I always suggest people in the beginning, when they're starting to get used to trading, just pick a handful of tickers. You don't have to try to trade, like, all 1,000 tickers and figure it out. Pick a few tickers, understand the price action, and see how things work out, and what you can understand from it before you try to do it all through across a bunch of tickers. Like, I see a lot of people trying to do what I do, and like, for me over here, like, this will take time, but I mean, I'm sure everybody will be able to do it eventually. Like, for example, like, the one thing I've been doing is looking for these weekly setups. So what I was just talking about earlier on stream, I can just go through my list and, like, I don't even have to do anything. I know exactly what I'm looking for. I can click through everything and just know which setup I want to do, and that's, like, kind of where I want to get everybody at. And as we're talking, you guys will notice, like, which setups. And being able to play in between the zones when there isn't a setup, it's not saying that you can't play and people don't play. It's just I'm very, very, very strict on my strategy. The more I started following my strategy, more I realized that it was actually a winner of a strategy, and I actually do have a decent of an edge, and I didn't end up losing as much. Like, whenever I break my strategy, whenever I try to not follow my set of rules that I've come to mentally make, I don't lose as much money. But whenever I break my rules, it's guaranteed I'm fucking losing my money every fucking time. Every time I break a rule, it's like a 90% chance that I'm gonna lose my money or take some kind of L on that. So my rules and strategies are pretty much based off of years of experience on this stuff. So again, you can tweak it to your risk tolerance, but you typically have 3 different stages in Ichimoku for risk tolerance. Like I said over here, there's the soft support line or soft resistance line, which is the Tenkin. You have the hard support line, which is the Kijin line. And something that I didn't really discuss right now is I use my B bands as well, and we'll discuss that probably on part 2. But my B bands midpoint is the second stage. So first stage would be Tenkin, second stage would be B bands, last stage would be Kijin. So you can adjust your risk tolerance to either or, whatever you're more comfortable with. So regarding end-to-end plays, I've seen different places that it's not a good strategy to take when the price enters the cloud. Do you have an example of a ticker? So what I'm essentially trying to do is I'm trying to look for reversal points. You can play something that's in trend, but like, I mean, I see what you're saying. Like, for example, like, I think people were interpreting it that way with this one. Like, Disney is one of the ones that I was looking for a reversal into the clouds, but we weren't really getting it right now, so we failed down. So this wouldn't necessarily be a good play. And what you'd want to do, let's just say you do want to get into a cloud play. I don't know. Let me pick a ticker. All right, so this is on the 1 day over here, and we have price action that entered into the clouds over here. And before I even get into even more of it, there's levels to these cloud plays as well. Like, for example, there's like cloud structures that are very good and healthy and that have a good high probability of actually doing an end-to-end play, while there's cloud structures that have more of a probability of getting rejected and playing out a scenario of like what you're explaining, where it typically wouldn't be a good situation to go ahead and grab into because there's more of a chance that that's going to reject and dump down. So I think that's probably the best way to answer your question. So with that being said, let me pull this up over here. Like, things that you want to avoid would be something like this. Like, here's an example over here. So you see over here how we have a weak cloud point. While there is a play involved into this, but when you're strictly focusing on end-to-end plays, you want to avoid thin clouds and weak points like this. And this is something that you'll pick up over time by just observing price action. Like, I can give you a million examples on this one, but you'll understand better because the cloud doesn't have a specific shape on everything. It's a general shape across the board. So let me pull this up on Ford. So, like, for example, with Ford, if for some reason the price can go ahead and get into the clouds over here before, I would say before May, that's a healthy cloud entry over here. That means we have a cloud entry from 1430 all the way up to 1850. I mean, that's beautiful. But now the issue with other things, like sometimes when that happens, is something like this. So when you're seeing the cloud structure over here, it's gonna go through the clouds and you'll hit an end-to-end play, but the issue with this is that it's a small cloud at play over here. So it's only 667 to about 724. I can pull up crypto and do this on crypto too, but either way, like, you want to make sure you're having healthy points, because if you're doing something that's not at a healthy cloud structure point, that turns into an FTA play, which means it's a first trouble area. And that typically means it's a zone for something to go ahead and break out of, because it's either a weak zone for us to cut through, whatever it may be. Like, so for example, something like this is where I would take a little bit more caution on to get long. I would rather wait for the breakout to get long on this one. So just visually looking at this one, this would not be a signal to get into. The only way this would be a signal is if I was in early on the B-bands curve and I was just already in a position. So that's a bad cloud structure, and that would result in what you're saying is it would not be a good place to enter into the clouds. But yeah, I mean, as I see more examples, I'll pull that up. And please, guys, ask questions, because it helps me. That way I know how to answer it, because everybody interprets things differently in trading. I don't care who you are. Everybody's brain operates differently. Trading is like one of those places where your personality will show in your trading habits, without a doubt. Like, I see it myself all the time. I'm like, damn, I need to fix this part of me ASAP. So everybody's different. So please ask, because you might ask something that I might be able to interpret a different way to somebody else. So, is this Bitcoin Weekly? Yeah, dude, it's fantastic. That's why I'm like so excited. Here, I can sidetrack a little bit. The reason I'm so excited about this is if we go to the daily clouds over here, just in general, just common sense in crypto said to me that unless we can recover Sam's dump, we're not going to go anywhere. We completely recovered Sam's dump. We went end to end to the clouds beautifully. We broke out and continued on through. Like, that is fantastic. So when we get over here on the weekly, if we can actually get in here, since we've already recovered FTX's dump well ahead of time. I mean, for the amount of FUD we had and the fact that the price completely bartered back up, I'm blown away. Like, I'm so shocked. So yes, everything so far is very, very good for Bitcoin on the weekly end of things, because you know it's not going to be entering in until April time anyway. So when it enters into April, you have this zone right over here. So that leaves us with a decent cloud play over here on Bitcoin to show something that's already been moving. And I don't know if this is because of the halving or whatever it may be, but the weekly entry on Litecoin, this does it every single fucking time on crypto. If you watch Litecoin and you strictly play Litecoin, Litecoin always outperforms in a bear market, at least as far as I watch it. The weekly cloud signals go in every single time. This is one of my best plays that were for the bull market last time around. This is the one that we did. I still have everything over here. We got into the weekly cloud play on the support test on the B-bands, and this thing ripped. So we're pretty much looking for the same exact thing over here. Right now, I'm looking for a support test a little bit lower or a little bit more consolidation. But yeah, with the halving right around the corner, I would assume you get a little bit more of a pump. If you're just generally a price action person, let me draw your price action line. This is for price action people. You can probably even draw one a little bit lower if you're more safe, quote unquote. So you have two endpoints over here, which would match up with Ichi. Now this is a pretty gigantic end-to-end play. There's a point where it's a little too exotic. Like, you probably wouldn't want to bet to the upper side. So let's just say you did have sells, you wanted to sell out of this one. You would layer your sells inside of here, and you probably would not want to keep a decent size up at the top unless you really think it's going to go through. These are really big cloud settings, so just, yeah, there's something that's like reasonable that happens in the market, and that's unreasonable for this to think that it'll go up here without consolidating in between. So the other thing that Ichi helps with is, I don't think I've talked about this in any of the articles, is you see timing on the market as well. So what I mean by that is, let me show you that Bitcoin chart again. So that Bitcoin weekly chart shows me one thing as far as like timing is concerned. What it shows me with timing is, so this comes back to what Careless said. You said, what's a bad situation again, to where it typically ends up projecting into the clouds. So kind of goes off what you're asking again. So when I look at this one, I'm seeing one major line. I'm seeing that the cloud structure bottom over here, before we start breaking down and start looking bad in general, is right over here. So but then the date for this is May 1st. So by May 1st, at the latest, we need to start breaking into the clouds and going in. Because if we don't, what ends up happening is that we'll ride this price action down into the clouds over here, and then bearish retest and go back down. And that's going to be the worst case scenario, is that we ride back down and we don't even get the weekly cloud entry. So that's my biggest concern right now. So as long as any time before the 1st of May we get into that point, and I could probably make this a little bit better. Ideally before it looks like it's April 10th. If we can't make it into the clouds, I would say ideally April 10th. You don't want to wait till May 1st. That's a little too low and a little too late. So if we don't get into the clouds by this point, into this zone, that's not going to be good at all. And those are the things that you'll understand, like, hey, this isn't a good sign. I shouldn't get into this because we're not getting the price action move we need into the clouds by a certain date. Like I said, if you see chart examples, bring it up and I'll show you guys. What you want to look for is one-day cloud entries, ideally, because there's a lot of things that might not have blown out in the stock market. What I'm looking for right now is a lot of weekly cloud entries. Can you see the Kumo on the day that's considered healthy or not a healthy thought? Okay, so like one of the things that I use those Kumo twist points for is, so with B bands, what you'll see is you'll typically see like this curve over here. Let me pull it up on a better ticker that I have examples for. Like you notice over here, let me turn off Ichimoku as well. You see how the B bands line over here? This is the midpoint of the B bands. That's the second indicator that I use with Ichimoku. So my main indicator is Ichimoku. My supportive indicator is B bands. And that's it. Those are the only two things I use. Anything else you see on the chart is just extra nonsense I don't even want to discuss. But yeah, you see this curve over here. So you'll see two different things around here. You'll see a curve that bends out and does a hook to the upside. And then there's one that does a hook to the downside. And they both involve telling you whether the market is topping out or whether the market is bottoming out. But let me go back over here. Let me turn Ichimoku back on. So sometimes what you'll see is, let me see if I can find an example. XOM. Like sometimes when you see points like this, for example, you notice over here how there's a Kumo twist. So this is Exxon Mobil on the daily chart over here around 1026 and 1114. So there's these 2 points. Let me go ahead and draw them. So these two are basically the Kumo twist points where the cloud is the weakest, and we have things that can go on when we're having the price action either go above it or below it. When it comes to my options trading, I know for a fact that sometimes when my price action... Sorry, there's a fire truck. Whenever the price action goes over these levels, that typically ends up kicking up my decay on the options, whether it be for the goods... oh, man, these trucks... So yeah, it kicks up my decay for my options. So for example, if I have call options in and we're going above the clouds, that's likely somewhere I want to either take profit on or try to get some kind of hedge plays in. So I don't want to get everybody confused on the option end of things, but the Kumo twist points are a little bit more down the line. That's probably a part 2 question, but that is something, oh, it's a good one. They claim I can't get in trouble for that anymore. Yeah, the moon phase stuff, no, I mean, the moon phase stuff is a lot more simpler. I mean, the moon phase stuff is, like, just absolutely simple. It's like, you long on the moon and you bottom on the moon or whatever, however it works. Yeah, the moon stuff is just, I mean, it's just a different kind of TA. I mean, obviously, I can't bring spirituality to numbers. It's like, all right, you're not going to tell me this stuff works. Well, it might work for people, and I'm sure the astrology stuff does work for some people. My mind will not process the fact that it works. So I'm sure, I know I have great traders on my feed that use astrology and stuff. Not Marin. She's full of shit. But other people who do that. So I don't know. I mean, that's their own thing. More power to you. If you can read the stars and you can trade charts, you should be doing much more than trading. Okay, so yeah, but that's the Kumo twist points. That's something you want to focus later down the line. Like, for example, we're going over here and we're having weak Kumo twist. It just shows you a different interest in the market and what's going on in the market. All right, where are we at right now? We did the Kijin and the... So you guys already know what end-to-end plays are in this video so far. You guys should know by now what the Tenkin and Kijin are and what kind of weight they hold. You should know that in combination with B-bands or in combination with Ichimoku, I use B-bands. And the main line that you only have to worry about for the start is just the mid B-bands line. There's 3 stages of risk tolerance to your trading when using the lines on here. So like, for example, stage 1, which would be... well, yeah, this is pretty much in the beginning. So it was not good. So we see the B-bands curve over here. So the curve is the first sign. That's bad news bears right there. And this is one of the biggest reasons I started using Ichimoku in combination with B-bands is because I'd get just slightly delayed signals on Ichimoku, and that would piss me off, and I'd be like, what am I doing wrong? And the way B-bands works is, here's another feature on this one. Whenever you see an extension on the bands, whether it be up or down, typically it's followed by some sort of pullback, mean reversion, or consolidation. So one of those things end up happening. So like for example over here, you see that Dixie ran outside the clouds and was hanging outside the clouds, resulting in a pullback right to the middle B-bands line, and then hence and so forth, everything else. So if we turn on the Ichimoku signal, we don't get a bearish signal on Ichimoku until about over here. So that's your bearish TK is right over there. However, if you got out over here when you get the extension or you get a little bit of consolidation, that is a little bit ahead of time. Dixie is probably not the best example, but if you're picking other volatile tickers, that ends up helping a lot. But then you see over here after that, you still start seeing the B-bands curve out. So you see a full-on hook over here in the background. Let me see if I can turn off a couple more things. So if you notice those little mountain-looking hooks, if you're going from left to right, what it'll look like to you is it goes up, consolidates a little bit, but essentially falls over. And as it starts falling over, it becomes a rejection line. And when we turn on the Ichimoku stuff and everything like this, cloud entry play, and so forth, and it keeps riding down after that. So that would be a way to identify a top. Now, if we look at what's happening right now with Dixie, again, this is something else that's forming a bottom. And I'm hoping you guys already know like how to play some of these things. Like for example, with Dixie over here, like here's an example. You would want to draw out your top zones with price action. So whenever I'm looking at this one, I already know when looking at this that this is the main line that needs to clear over here when it regards to price action. So I can turn everything off and just focus on this line and just know, hey, we need to flip this zone. Because I typically read my price action from left to right. So I know we need to flip this level. This just gives me extra confluence with this, knowing that, hey, there's nothing that shows me that we're going to be clearing out of over here. So to use like a better example, let me go to the tickers. If you guys have any tickers, put them in. Oh, Dime gave out subs to people. He might have left, but thank you, Dime. And now you're back. Lay down. What was the ticker? Let me see what was the one that somebody mentioned. BBAI. BBAI. Oh, this is AI tickers. I mean, I'm going to be honest with you. I don't typically play tickers like this. I don't play tickers that are sub $5 that often. There's like a very, like less than probably like 5 tickers I play. So I'm not very good at things like this. Things that just pop out like this and just have extreme gaps up and volatility and that are very, very cheap. I just kind of avoid that in the stock market. It's just not something I'm good at. And I don't mind tossing money into commons and just betting and holding on to it, seeing what happens. But if it's any sort of like actual trading strategy or part of an investment portfolio, typically I don't put the same sizing in for any kind of plays like this. Just because, again, like I'm not that good at it. Like I could try to scalp it and I could use a strategy based off the 15. Like over here on the 15, like you can see it over here. Like the clouds are shitty just because of the fact of the ticker and what it is and the liquidity, all sorts of things. But yeah, I mean, it rides up the clouds over here, starts breaking down over here, and you could use it in confluence with the hourly probably. Yep. No weakness on the hourly and keeps going. We're finally into the clouds now. So with that being said, there's your top, there's your cloud base. And the cloud end-to-end play would end out at about 457. So if for some reason we lose this level right over here with Big Bear AI, it should go ahead and reset back down. Okay, yeah, that's what I was just showing was the thing. Oh yeah, let me go back to that real quick because I forgot something. So when you're doing the longs over here, notice how we're seeing some of these lines over here, how it's starting to curve out. You can see the line doing this little hook over here. You can see us getting close to the cloud entry. Something you can do over here is, again, you have your risk tolerance levels over here as well. You have your Tenkin over here. You have your B-bands. When it's something like this and you're looking for a reversal, you can use that little cluster over here as a point. Whenever everything is like very close together, I consider that a cluster. So I consider that a little bit more, just a more stronger of a zone. So just drawing price action and just knowing general price action things, I mean, this would be my normal price action level anyway. So you have choices of your stops. So whenever I do any kind of like plays like this, I'm okay with my risk tolerance because I can manage plays. At this point, I know if I go long and if things go wrong, I can still go ahead and hedge the plays out. Like, hedging is very, very important, but it's typically done wrong by people. So that's a whole different thing. Hedging is a strategy that you got to do if you're comfortable with, if you have the capital for, and just so many other things. But yeah, this is the line I typically end up using. If we don't end up breaking that line, I'm typically still going to be long and waiting for that end-to-end play. And the other thing is the reason I picked that bottom line is because by the time I reach to the Tenkin, I'll know ahead of time if I need to cut it to Tenkin or if I need to cut down at price action levels. If I'm cutting down at price action levels, that typically means I'm breaking some sort of rule of mine, or I have some sort of hella conviction in that shit that I know it's going to bounce. So let me see if I think there is a live example of this going on right now. PLTR on the weekly. Oops. Never paying for this one. Alright, so yeah, there is something happening on the 1 week over here with Palantir. Which, by the way, I'm seeing that they're trying to get into, like, the more so, like, I don't know if they were already in it, but I've been seeing they're hiring for a lot of government related jobs right now. So I wonder what kind of pivot they're doing. But yeah, let me go ahead and draw that price action line. This is my price action line over here. So I know if I wanted to get any kind of, I could probably extend this out a little bit more. So that's my general price action line. While I know the Tenkin and mid B-bands line is over here, I'm able to tolerate some sort of swing. If I feel it's not going to swing out, it's not going to wick out over here, I'll be out ahead of time. And you got signals over here as well. So the reason I know it'll start breaking down and going, like, for example, let's say you're not using that risk tolerance line, and you're just strictly using Ichimoku. Notice how the weekly levels are right over here. So you're seeing the weekly Tenkin right over here. You're seeing the mid B bands over here. Now let's switch to the daily. That's the daily cloud play right over here. So what does that tell you? Like, this basically all combines in with what I was saying in the beginning. So you see your weekly setup over here and you want to get long. You can get long over here and basically play the fact that it's not going to be breaking into the clouds and it'll just hop up. If for some reason you think it's going to break down, you got an end-to-end play on the daily. So there are plays. There's definitely ways to do this with all single time frames. You just got to make sure you're cycling through everything and not getting stuck on one single time frame. You don't typically have to go to the monthly. The monthly Ichimoku, that's probably more better if you're like an investor and you're like an old person. So the monthly is a little different. Typically, I don't use the monthly as often. I'm not that much of an investor. I don't even think they make puts. That's the reason I don't do cheap tickers, is because they don't have puts. But if you look at the weekly right now, I mean, B-Buy's at weekly resistance. And not only that, we went from the beginning of the year, we went from $1 all the way to $5 in the stock market. I mean, that's fucking fantastic. I mean, I think this is the one that just got added onto Wall Street. I think somebody else, I think you did bring this up before. So, yeah, this is the top right now. This kind of looks like Disney. This is a little bit more of an extra strategy. I mean, this is kind of something I use for like options. I kind of discussed this on that Trend Spider stream. When you're doing options and you want to go ahead and buy like leaps, you want to definitely check out the historical price action, because, and I learned this the hard way as well, too, when I first started options. When you're buying things that are going in a set direction and you're trying to buy dated out protection, you're going to be paying a lot of money for dated out protection. And let's say you're an investor with options, because that is a thing. You can technically be an investor with options. And I do see hedge funds and other kind of trading firms use dated out option strategies, and they have a way to do those kind of things and still cash out. Just keep in mind, if you're trying to chase things when it comes to dated out protection, you will suffer if you're playing things when the premium's blown up. So let's just say you're trying to buy in things over here. Wonderful. Things will be cheap. Things will get a little bit more expensive when you're around this point, and you're trying to buy something out that's a year out. But then when you get to this point and you think a day's worth of pullback is going to be good, you're going to get wrecked, because if you're buying yearly protection when we've been going up non-stop for weeks on end, you're going to be paying hell of a premium. you're going to be exposed to a lot of decay, and you're going to be a very unhappy camper by like 6 months down the line. So right now, what I'm seeing across the board with a lot of the stock market is that in 2021, in around springtime, we pretty much topped out. So we've been going down nonstop for a year. So explaining what I just explained about longs and for dated out call leaps, what would be the strategy for the downside of the price action? You don't want to do puts. If you're trying to buy dated puts because you think the world's going to crash or there's going to be a recession, well, go for it, man. If you want to do it, go for it. You're going to be paying hell of a premium. Other people are going to be profiting off of you. And basically, you're making like a doomsday bet at the worst time with the worst prices. If you wanted to bet the world was going to crash, the time to do it was like last year, this time. Not this year now when we're trying to get these weekly cloud entries. So those weekly cloud entries is what I'm looking for. And what those weekly cloud entries result in is the fact that I know weekly cloud entries mean that the price action already has been going down for quite some time. So that means that a lot of the leaps that I want to buy or any kind of dated out options or most of the options chain for the opposite play is going to be cheap. It's going to be discounted and it's going to be something that's more tolerable for me. I typically don't do $15, $20 options. I mean, I hope there comes a day where I feel comfortable buying like hundreds and hundreds of contracts of expensive options, but I try to stick under $5 for option contracts. I typically don't go over $7 per contract. So, let me just pull up something else as well. But yeah, again, that's also one of the reasons why I grabbed those UNG plays from today. If you notice UNG over here, UNG cloud structure just shows that it's been going down. So this is something that I'm betting in on early. So you notice how earlier I drew all those lines and I was saying we're betting early on a cloud entry. Nothing has started to form right now on Ichimoku just yet. The only thing that we're forming is that we're possibly going to flip over the Tenkin, but we haven't had a curve form out. The only thing I'm basically betting on for natural gas right now is that we're going to be swinging this off. It's the beginning of it's still the start of the month. We're going to swing off and close this month off, and that's going to be a wick off this. NG over here. Again, same structure. We're bouncing off the monthly clouds. Again, I don't typically use them, but we're also bouncing off monthly price action as well. So that's why I'm betting a little bit early, because I believe the price action is going to form a bottom. And I've seen this before in trading plenty of times. I've seen price action form like this. I've seen plenty of bottoms form. Some of them I've played. Some of them I've sat there and looked at and watched them go up and then beat myself later on for not taking them. So more so probably that one than actually trading them all. Oh, B-Buy has options. Damn. They really want to take people's money. I would do puts on that probably. Probably do like puts for like September. Do you guys have any questions so far? I'm trying to make sure I don't get too crazy into details of so many things. I'll leave that for part 2, but I think I have a lot of the basics covered. How long have I been on? I think I should still have a bunch of time. Yeah, we're just coming in up on an hour now. So I'll leave the floor for some questions. See if anybody has any questions, any kind of tickers they want to go through. It can be crypto, it can be whatever you want it to be. I'll bring up ADA real quick over here for the one time. Like this is what I'm saying. Like in crypto land, it's the same thing across the board. And like this is like the easiest investment thesis is ADA. Like as long as ADA doesn't look to scam people out and they still keep building and they still keep promising things, as long as they keep doing that and nothing crazy happens like a hack, that Charles doesn't lose his mind and go crazy and turn into Sasha from Waves, as long as nothing crazy happens, I mean, ADA is one of those coins which you can accumulate, you can go ahead and buy out, because I know so many people that shit on Beastie like this entire time you were going down, and all that man did was DCA his entire fucking profits and his entire life into fucking ADA. And ADA ended up performing out fantastically. My man got it in around like sub 20 cents, ran all the way up to about $3. And right now, with that same expectancy that once we do get into a bull market, these are one of the few dino coins that I know will go up. So if I wanted to go ahead and toss in money, let's say I did have a job and I was working and that was just extra funds, I'd probably put like $1,000 in every paycheck and just basically try to build a bag up. And then what would end up being the result is that once we get that weekly cloud entry, at the minimum, I know it's going to be coming up to here, because this pattern that you see right now, which is this, what this ends up resulting in is one of these things. So whenever you see a pattern like this, it typically ends up going something like this. So you'll see it peak out at certain points. Well, that's a bad line. You'll see it peak out at certain points and then never reach back over that same peak. So this is me just basically betting on the fact that it'll reach up to the third peak. I'm not even getting really exotic. I'm just kind of betting that it'll reach about 90 cents. So if I can get in from like 20 to 30 cents, I mean, that's a great flip for doing nothing. Nothing. Absolutely nothing. So there are investments in crypto, but it just, again, it's more about position sizing and how you scale in, rather than finding that ultimate ticker. Like, yeah, you can play like shitty smaller caps and things like that, but no questions. I guess people mostly DM me my questions later on. Do you see Bitcoin tapping? I mean, on the weekly, Bitcoin hasn't confirmed anything bullish yet. So on the weekly, let's see where the levels are. So the weekly Kijun over here is at, and the Tenkan as well. So we have a little cluster area is around 20,200, 20,200, 300. So yeah, I think it can get around that 22.5 area again. Yes, that's technically the support test level before we do go ahead and go through. So if we go ahead and turn off Ichimoku, what we should see with price action is, hold on, like this black line right over here. This is the line right now. So we need to make sure we're support testing and going on through. Worst case scenario, we wick down a little bit and swing out and then come back up. But yeah, this is the level that we want to go ahead and do this at. Is around that 20,000, 21,000 level. What else is there? I mean, in reality, I gave you guys pretty much almost everything that's involved in each year. Everything else is just kind of observations and understanding how most of this stuff works. Let me think of anything else, if there is anything to cover. Let me look at my Substacks. And I am putting a team together again for projects. So if you have any kind of like experience in like community management or any kind of experience that you think might be helpful for like a crypto project, shoot me a DM. If you did want to be on the team, obviously you would get, I mean, you can choose how you want to do it. I mean, you can either get paid for it or you can get a cut of the project, however you want to go about it. But we can discuss that in personal, or in private. So just go ahead and DM me if you do want to work with me or create a project. It can be a variety of things. Just tell me what you're interested in working on. B-band strategy. We have a top band, mid B-bands, all this stuff I've already discussed. This basically discussed those price extensions. So what you can actually do is you can actually read the B-bands article first, since it's probably a lot more simple. Like I have a couple traders that don't even use Ichimoku. They just like B-band so much. And B-band has a very simple strategy as well. You short anything that extends to the top of the cloud and basically long anything that hits the bottom of the cloud. So it's a very, very simple play on B-bands. You just play top long, up and down the whole entire way. And then whenever you have cloud extensions, that's a whole entire different thing. Again, it kind of comes down to more so like how the cloud structure looks when it comes into it. So like, for example, it doesn't matter if it comes in from the side or whatnot. It just matters on how much space it has to run, and does it have enough time to run. So like Bitcoin can go ahead and enter into the daily clouds over here, but it wouldn't be the same exact end-to-end play if it ended up entering into here. So yes, position matters a little bit as far as like where it enters into, but the idea should still pan out depending on how it plays. If you have an example, I can probably pull that up a lot better. I can go through a couple tickers and see what we see across the board. Oh, so you want to know strictly in general with like cloud entry setups. I would say cloud entry setups, something like that. As long as it's forming, it's over 75% of a hit rate. I mean, that's just kind of because there's more involved in the Ichi than just cloud entries. I just explained cloud entries because that's like the simplest and most easiest thing for people to understand and to actually start trying out. So I would have to give that over a 75% hit rate as long as conditions meet up. I mean, the other 25% is when things go wrong and it doesn't work out. But as long as it gets in and the market's fine, it's good. Because Ichimoku is very trend based. So the reason I'm aiming at those points are because they're reversal points. So since I'm picking reversal points, I have my invalidations that are tighter. So I know exactly right off the bat that, hey, I got to get out of this if I'm wrong, and I can manage my risk a lot more versus playing something that's not necessarily that kind of play. Let me show you a different type of play. Like, here's a different style. 10 can. So here is a different style of a play. Ignoring the clouds altogether, there's plays where when you see like the B bands line has been going down, or I'm sorry, the price action has been going down like this, and you see the Tenkin line and the Kijin line parallel against each other. Doesn't matter if it's going bearish or bullish, but there's plays in between where you can just long in between those two levels. So there are plays like that. Like, for example, if I turn off the B bands over here on this one, you can notice over here that the price action pretty much gets into the Tenkin, doesn't flip back over, and you play it down to the Kijin over here. So there's those kind of plays as well. So that's why, like, it's 75%, just because there's a lot more. But that's, like, probably the simplest one. I hope that answers your question. Let's see if I can do this real quick on stream. We'll do this based off the daily time frame, and add a parameter here. Hold on. Add a script. Nope, that's not how I do it. Oh, completely unrelated to anything. But that apparently that new Zelda game comes out in May. I was a little shocked by that one. Here's something else completely that's more so to do with options. So something I do with options as well. So you notice how I went through everything and I just started explaining like those weekly cloud entries and everything we see on the weekly. Something else to support your bias on things is, let's say you do have a support test around this level. I'm just picking Bitcoin as an example. And then you see order flow coming in around those levels. That's a pretty important thing. So, excuse me. Hang on. Like UNG, again, this is the one that I'm betting on. I'm personally very bullish on, and I think this is going to bottom out. But this is something where I want to go ahead and try to see open interest starting to build up on dated out calls. So right now, I'm not seeing anybody buying like any kind of like crazy dated out leaps right now. Like there's a couple, but nothing worthwhile of anything. So if we go back for all of February when we started bottoming out on UNG, there was a couple players coming in for dated options flow, but not that many. But now when we go into, what week are we in? We're on this week. But now when we start to bottom out, I'm starting to see a couple names that are a little bit more dated out popping in as well. So that's just something that adds on to my list. And you can see it over here on the right-hand side, what the open interest is and how things look over there. So that's another simple strategies that I look for, is that since I know we've been crashing down for about a year, if we're looking for option buyers that are coming in and they're looking for like a dated strategy, those are the ones that I want to hop into, because I can't tell you how many times the buyers that are buying out those dated calls, those things go deep in the money. And when things go deep in the money, it's a couple 100%. So those are like the easiest paying ones, as long as you're in early enough on it. It's just, I know a lot of people don't like doing dated options because they find it to be a little risky and all that stuff. Dude, Smeezy, thank you for hopping on, man. If you have any questions, definitely ask away. I appreciate you hopping on. So have a good night, dude. Let me try to pull up those Pepe check things again. I saw those things were pumping Pepe checks. Yeah, here we go. Pepe edition. Oh no, they're back down. I might want to buy some. But yeah, these things were at like 0.06 the other day, And I mean, there are a lot being sold right now. So I mean, still right now the volume's very liquid over here being sold. I'm assuming these end up pumping up a lot more, but they're cheap right now for 0.01. But basically, the thing behind this is that if you burn 100,000 of them, you get a giant tungsten cube. And if you look at these things, if somebody's gonna buy, because somebody has enough money. If there's a portion of Twitter where it's just a flex game. NFTs, there's a portion of Twitter where it's just all flexing. If you own something, if you do anything, it gets you street cred, it gets you followers, it makes you seem cool, it gets you access to people's parties. I mean, just purchasing things and flexing little tiny things like that gets you a lot of access to things. So there's many different ways to play in the game. If you have a lot of money, you can play the social game. You can play the flex game if you want to just flex things that people can't do. Like, what I mean by that is, hang on. Burn 100k Pepe checks and have a 1-ton tungsten cube delivered to your doorstep. A 1-ton tungsten cube. That's completely unnecessary. There is no need for anybody to have 1 ton of tungsten sitting around. That's 2,000 pounds. Or I'm sorry. Yeah, that's 2,000 pounds. Like, what? Why do you need that? I don't know, but somebody in crypto will. So how much does that work out to right now? Let's just say somebody did want to go ahead and buy it out, and I don't know. Let's say they want to buy 100,000 of these. So you're probably gonna be spending. Let's open up the handy dandy calculator. I'm assuming the price is probably gonna run up a lot. So you're probably gonna have to blow out all these buys out of here. Yeah, that's half the supply. And people don't realize somebody will flex. I guarantee you, somebody will come out and be like, hey, can you deliver this to me? Because I need a drop of clout on Twitter. So somebody will do it. I know. Because this thing is ran by Vince, and just Vince is a flexer himself. He has a bunch of unlimited amount of funds. There's just some of these NFT people who just have unlimited money, and you can't do nothing about it. They will spend hundreds and hundreds of thousands on JPEGs and not be phased one bit if the price goes down. They'll never bitch about it in their life. They'll just simply buy more. So some of these people just have unlimited funds. But back to what I was saying about this one. So yeah, these are at 0.02 right now, 0.01-ish right now, 0.08. So if you bought this, you're probably going to run up the price, I would say, up to, at the very least, 0.3, 0.4. So if you're running up the price to 0.4 and the common folks are getting it over here, this just seems like an experiment where everybody wins. If you have a smaller account and you're not really that big into options, you still get the feeling of being, or I'm saying options, you're not into NFTs, you still get the feeling of being part of something when somebody else bigger sweeps. And if you're somebody bigger, there's a balance of where you're not really a peasant anymore, but instead you're a flexer. So the NFT game, oh my god, I can't tell you, like, I personally find it so fun because all of the fundamentals behind it and just like the mechanics and like the social aspects of it, they've all come out of video games and just doing shit I've done since I was in high school. Whether it be stuff with like marijuana or partying, business, whatever it is, all that stuff came into handy with NFTs. And if you have been in that side of the world and you do have a little bit of street smarts, it's even easier to make money in this stuff. It just, don't fall in love with stuff. That's the biggest mistake I made. I wish I would have understood that out of these NFT projects, there's probably like 3 or 4 investments that pop up every 100 projects. So I wish I would have learned that one a little bit better and just got into stuff and got out. I probably lost a lot of money that way. Like the parallel stuff, I had about like $1 million worth of parallel, and I ended up holding that shit down to about, oh my god, I don't want to say the numbers, but yeah, I held that parallel shit down to fucking nothing. So yeah, falling in love with stuff doesn't matter if they make it out to be that Jesus himself is going to be playing the game or the NFT and he created it. It's not worth it. Take your profit, get out. There's like like I said, there's like 3 out of 100 every time that are going to be long-term holds that are going to be good. Yeah, I'm going to go ahead and get off. Again, I really appreciate everybody hopping on. Thank you very much. And if you have any questions, just go ahead and DM me or whatever. I know a lot of you most likely will that end up